Hello and welcome to ICE Commentary this week for the dollar index and currency markets. You're speaking with Nick McDonald. Last week, while remaining bullish on the dollar index, I was looking for a pullback towards 77, and it just so happens we've pretty much closed there at the end of last week. So we closed around 76.90. So let's come and have a look at this on the weekly chart, which is where I liked it. So we knew a pullback was due. We knew this happens in up markets, and I said 77 would be really nice because it would be pulling back into this really major level. It'd be a good place for a bounce off it, and I still maintain that. So what I'm going to be looking for here is a sign in the candle. So I want the candles to turn bullish in order for me to get long of 7700. So last week I was looking for entries. I was coming right down on lower time frames looking for them. They just didn't set up because the market didn't turn at 77. So I need to see it turn. So for example, if we had an update on Monday, and a fairly small update, just a bullish candle down here at 77 on Monday, and then on Tuesday it broke up through the high of that candle, then I may well take that trade. However, of course, that may not set up. So we're at a point where I'd like to take a trade, but I need to see something set up in order for me to do that. So I'm waiting for the candles, or I'm waiting for a change of trend on a lower time frame. I'm waiting for something bullish to occur here to tell me that yes, price is turning around, and then I get to place my stop in behind 77 while buying just above 77. So we need to watch and see. Now, that's my technical view. It's my view following on from last week that this is a good place for a bounce. However, there's another thing we need to take into account here. Now that we've pulled back so far, what we need to be taking into account is just how bearish it's made the monthly chart look. So now this monthly chart's just moved down, pulled back into the averages, got a bearish candle, and if we could, especially if next month we broke down through this low, we'd be starting to look very bearish based on a monthly. So even though I would like that bigger pullback opportunity, I didn't take into account how it was going to look on the monthly if we got there. Now we are intra-month, so that doesn't count as much until that monthly candle is finished, because of course if we do get the bounce of 77, then that candle won't close bearish at all. We're likely that it could be quite a bullish candle. So watching this very, very closely, but there's one reason why I also think that I'm potentially moving back towards a bearish dollar. I'm going to wait and see what happens here, but I'm potentially moving back towards bearish. Now let's just go back for a moment to 2008. Let's look at what was happening back before 2008, where the US dollar was just falling. Things were pretty good economically, were reasonably good. People were reasonably happy there wasn't too much fear in the markets. 2008 came along, and what happens when people get fear in the markets, especially in the stock markets, if people get fear out there in the world, they look back to the US dollar. People start buying US dollars again, and in fact, the US dollar becomes the main safe haven. Happened back here in 2008. Big US dollar rally as people started to get scared and panic, and they started to buy US dollars. Look what happened here as well. So we're coming down, and this little move up really is just the fear of Europe. So we had this Europe fear. It hasn't really struck anywhere near the same kind of fear as what we had back in 2008 yet, nowhere near it, but it certainly created a bit of a dollar rally. And it was a fairly significant one, if not as significant as we had back then, but still quite significant. And based on my Russell video, I just did a Russell video where I think that the fear is moving out of the market. I'm quite bullish on stocks again. And based on that, if that is true and it continues that way, if the bad news doesn't come back again, then I think it's also quite likely that the US dollar will continue its decline, where people will stop seeing it as that safe haven. And if people are stopping looking to the US for support, if they no longer feel they need that support, there's a very good chance of the US dollar going down in the longer term. So at the moment, that's more of a fundamental view, and it's very much just a view. That's what could happen, but we need to see what actually does happen. So I've got two things I'm poised for here. One is I'll still take the long trade. I stick by there's a saying in trading that you've all heard it before: trade what you see, not what you think. At the moment, I am seeing that we're back at a major support level of 7,700, and I'll be looking for a bounce off 7,700 if the candles turn bullish. If they turn bullish, then I'll be trading what I see. However, if they don't turn bullish and they continue on down, then really I think we're moving back down towards testing 74, and then from 7,400, really seeing where we can go from there. So it really is a case of trading what we see actually happen. We're at a point where we should turn around. If we do turn around, I will get long. If we don't turn around, I don't think I'd necessarily go short on the way down, but I'd certainly start to consider things like if we move down to 76, pull back to 77, maybe a short at 77 then. So just watching it very closely and seeing what happens. There's also a pretty good chance we'll hug this level. Let's look at a few other of the currencies and just look at why I think that the US dollar could potentially weaken still. Euro dollar very much like the dollar index. So we've got a really bullish monthly candle. We only pull back 50%, bouncing off 50%. If we can break up through the next month and maintain this bullish candle this month, then break up, it'll be looking very strong. Even just coming and having a look at cable, and cable has come right down to the bottom of this bigger range that it's in and come right down to a support level here and starting to bounce off it. Candles have turned very bullish and certainly looking like coming up and testing the top end of that range again. So there's a couple of other signs out there of the US dollar turning bearish, and the dollar index, it's early days, but we're at a key decisive point right now, 7,700. I will take the long trade if it sets up. If it doesn't, it will be even more of an indication for me that the US dollar is moving back into a period of weakness, and that's an even more confirmation that I think that the Russell is starting to look likely to actually continue going higher. Let's see what happens. As always, I've said this so many times in the last few weeks, but it is a news-driven market, and it will be news that decides whether there's fear coming back into the markets or not. If there's a lot of news and it's headlines and it gets the public scared, then the US dollar is likely to go up and the Russell is likely to go down. However, if the news goes away for a while, then in fact the US dollar is more likely to be going down and the Russell is more likely to be going up. Technically, the Russell looks like going up anyway, and the dollar index is that little bit undecided right now, but at a key point, and if it breaks down, then certainly more indication of going lower. Hope that makes sense, everybody, and I hope that helps, and I look forward to seeing exactly what does happen here and speaking to you on next week's update.